Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought we'd take a quick look at what's happening in silver. Now, part of the reason why I wanted to look at silver today is because this finally arrived. It is a 2010 Year of the Tiger lunar 1 ounce silver coin. Now, I'd like to say a big thank you to the guys at As Good as Gold for getting this coin to me. It's very popular in some cultures, so it has been quite hard to get. So why do I have this silver coin? Easy. I buy this sort of stuff for my kids. I found early on that they weren't very good at making the connection between bullion and money. They just didn't see how it worked. But I found if I started buying a couple of silver and gold coins or two along the way, that they recognized that that was a form of money. Look, don't get me wrong. They are young, but I'm hoping that we'll be able to make the connection between gold and silver as money much earlier than most people come to the realization in their adult life. But in the meantime, with the gold price falls, many people have been asking if this is sort of a bear market for gold and silver. Now, we'll get to what's happening in the gold market another time, but what I want to do is talk about silver. Now, silver has fallen back under to around 16 US dollars, but it's holding up quite well in Aussie dollars. For the moment, it's still sitting at around $21.71. Are we expecting gold to fall further? Probably, but it's probably only going to be dragged down a smidge by the gold price because the ratio, obviously because of how gold and silver are connected. However, I don't think that means all bets are off for silver over the long term. And the reason why I think this is, I've recently discovered that JP Morgan currently have a 138 million ounce position in physical silver. Now, just to put that size, that position size in perspective, it is now the largest position in silver to a private holder in modern history. Now, many people know of the Hunt brothers when they tried to corner the silver market back in the late 70s. Now, their physical position size in silver was around 100 million ounces at the same time. It worked out to be roughly 1/3 of the silver market. Now, granted, the silver physical market is much bigger now. But JP Morgan, being a private investment bank, they don't make these decisions willy-nilly. So they've spent the past 6 years moving into creating quite a sizable silver position. So I actually think that bodes quite well for physical silver in the long term. My big concern, though, is that it may lead to restricting the physical supply of silver and that it potentially could trigger false price signals for physical silver and drive the price up higher. However, I do believe investors should always consider adding some physical silver to their bullion. The other thing too, silver is a lot cheaper to gold. So if you're nervous about investing in gold and silver bullion, silver is a great place to start because you can enter the silver market with as little as $30. That's all from me today, and I'll be back later next week.